In just a few minutes, the markets are set to open as we kick off the last day of a truly insane week on Wall Street. All week, it has been about the little guy trying to squeeze the big guys who are shorting stocks. And today, everybody is back in the game. Take a look at GameStop. It closed at $193 yesterday, but was trading around $350 after hours. That is because trading apps like Robinhood said it would allow limited trading only to resume for GameStop and other shorted stocks. That was after hours trading. And that was a reversal from yesterday. When things got so crazy, the platforms stopped letting investors buy those stocks. This move notably sparked outrage from investors and lawmakers on both sides of the aisle who accused Robinhood of manipulating the market. Why? Because it looked absolutely awful. The House and Senate even announced hearings to look into all of this. But Robinhood CEO Vlad Tenev says they've got it all wrong. It was really about market mechanics.
We absolutely did not do this at the direction of any market maker. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. In order to protect the firm and protect our customers, we had to limit buying in these stocks.
So let's just walk through this. To be clear, this was not about Robinhood or any of these other trading platforms trying to screw over the little guy, but they did fail. They had to stop trading to comply with government rules and basically keep themselves from going out of business yesterday. They weren't trying to screw over one side of the trade or another, but they made it clear they were not able to step up in volatile times, begging the question, can they do it going forward? My next guest is another CEO who was forced to restrict some stock buys yesterday, Jannick Malling. He's the co-founder and co-CEO of Public.com, a social network for investing. Also with me, Jaime Rogozinski, founder of the Reddit forum called WallStreetBets, where all of this got started. Jannick, let's walk through this because apps like Robinhood and yours, Public, are all about bringing the little guy into the market, democratizing markets so they're not just for the privileged who have accounts with big broker dealers. But what happened yesterday in forcing some trading to stop so those very clients of yours couldn't continue their trades, it looks horrible. It looks like you're trying to hook up the big guys, and people like AOC and Ted Cruz, who never agree, are accusing platforms like yours of manipulating the markets.
Yeah, so to be clear, we had, and thanks for having me on, Stephanie, first of all, we had trading open for GME, AMC, and KOSS throughout most of the day. Around 11 a.m. Eastern, our clearing firm Apex Clearing notified us that they were halting the buying of shares. We disagreed with that decision, but we worked very closely with them to essentially reverse it. And a couple of hours later, before the market closed, we unrestricted them again so people could continue buying of those shares.
Jaime, we see the outrage from the Wall Street Reddit community and across the board, people not understanding this. But when Jannick goes through this, when Vlad does, when this is not their choice, the way the clearinghouse operates, if you cannot settle your trades, if you can't match them up, then your margin requirements go way up and second-tier brokers can't step up and perform what they're there to do. Do people understand, A, that this is how the system works, and B, if they do, will they have confidence to deal with these kind of brokers going forward?
You know, I think it was clear that yesterday they didn't know that's how the system works. I know that before we got this type of clarity yesterday, there was a lot of anger. And to be frank with you, I don't think that they have to know how this is how clearinghouses work. You know, for the history of the stock market, you want to buy stocks, you push the buy button. You want to sell, you push the sell button. You don't have to worry about these clearinghouses. You know what this rings like to me? You know, in 2008, the banking system almost collapsed because they lacked the collateral, you know, the capital requirements to deal with the liquidity crunch. What we're seeing here is the brokers are not equipped with the collateral to deal with these, what I call high risk thumb traders. They're not afraid of margin calls, right? So this is a different structure right now, but we're definitely seeing a fragility in the system. And I don't necessarily think it's up to the individual traders, investors, whatever we're going to label them, needing to know about these capital requirements from these brokers.
Hey, thanks for watching our YouTube channel. You should know that you can follow today's top stories and breaking news and catch up on your favorite MSNBC shows all in one place. Download the NBC News app today.